Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia. Good morning, guys. For the first time since 5th of August, we have a full house. For some reason or other, one of us was missing from the show, but we have full house once again. And the market, of course, is having some kind of a full house as well. The Nifty has broken that upside line of the channel. Before I went on the leave, I spoke about that line that was important, and the market's broken that. And FIs have been buyers every single day of August, and the market's been very strong, within 4% of lifetime high for the Nifty, within 6% of new high for the mid-cap index. That stealth bull market has turned into a very strong bull market. Morning, guys.
Hi, good morning. Morning, Prashant. Morning, Anuj. A roaring bull market, right? I mean, just look at the way stocks are just zooming, 52-week highs across the board, whether it's auto stocks, banking stocks, a lot of your old favorites, the Tata Alexis of the world all coming back. So I guess now this has moved from a tentative bull market to a full-blown bull rally, at least for now. And it's been 6 straight days that the Nifty has been rising. Markets are at fresh 4-month highs and now less than 4.5% away from an all-time high. We're just about there already. Global cues are also quite stable, actually. The Dow was up in the green again for the 5th straight day yesterday. Foreign investors continue to buy. I think in August so far, it's been what? About 16,200, 16,300 crores has come in from FIIs. And crude has been falling. So that is also a big positive for us, right? Brent is now below $93 a barrel. So it's all guns blazing from all quarters. But the thing is, Anuj, there are no real positive triggers from here on, right? I mean, most of the triggers are now behind us, whether it's the impending recession fears or even, the rate hikes, etc. So what will this bull market be established on? Is it the recovery in earnings? Is it the recovery in demand?
Yeah, that's a tough question, right, Sonia? Because whatever it is, the market will price it in before that event, and we won't know. So I think somewhere in July we spoke about the fact that maybe September, October is a time when the market actually makes that decisive move. It's actually come before that, but right now we are in a bit of a parabola. If you see a parabola, if you're in it, you really make a lot of money. But if you miss out and then you enter, then the risk is, how do you enter? I think the only way is a trailing stop loss. I mean, if you enter, you put a 200-point stop and say, okay, I mean, if I'm stopped out, I'm stopped out. So what the Nifty has done is it's broken out of that channel, that 1-year channel that the market had. That's where really it had to stop. If it had to, it didn't stop there, which means that perhaps the way to all-time high is now open. The erstwhile resistance from the channel was 17,650 on a closing basis. Now that becomes your support. So, maybe, if that's the kind of stop loss that you're looking at. The broad market has been very strong. In fact, it's been stronger than the Nifty itself. And that was the first sort of sign that this was start of something bigger than just pure short covering rally. Is when, post mid-June, when the rally started, mid-caps led it. And now the Nifty stocks have started to participate because of the FII buying. In fact, the mid-cap index is up 25% from the lows. It's within 6% of new high. What that has done is it's really repaired a lot of portfolios. I think in May, June, you saw massive damage to portfolios. That's been sort of repaired, which is good news for individual retail traders and investors. And of course, the only approach in market is buy on dips. Unless that changes, I think that's something that you should not be worried about. We spoke about 16,500, people had missed out feeling. That's very quickly moved on to 17,500, almost 18,000. The all-time high was 18,500, 600. Who knows? Maybe, because momentum can do crazy things. Right now, we are in momentum. Prashant, what do you have for us?
I mean, absolutely, completely agree with that. I mean, it's just very, very strong bull momentum is what we have. And the question is, could this rally keep going? And I think the short answer is yes, definitely yes. So just a couple of things to put on the record to add to what Anuj said. One, of course, is that the market now has taken out, is almost there at the 78% retracement of the entire fall. We're from 18,604, which is the all-time high in October last year, to the lows of 15,200. There are 2 levels. One is 61.8, which got taken out earlier. And we are now at the final frontier, 78%, which stands at 17,870. Nifty is already above 17,800, which is nothing but a touch point in the falling trend line from the all-time high of 18,604. This is the 3rd touch point. And, the market is not hugely above it, but is above it. When the last close is 17,825, so can't fault that. That's the other point. In terms of sort of purely looking at technicals, just 2 points. The market has barely taken a pause since the bounce began, right? Actually, last week was the 4th straight week of gains. 4 weeks back, there was 1 week when the Nifty was down about 30, 40 points. So it was a down week. But if you ignore that, I mean, we've been going up for 7 straight weeks, almost 7 straight weeks. So, you know, we are getting to a point where simple technical indicators like the RSI, Relative Strength Index, etc., is approaching very, very elevated readings, which could portend some kind of a short-term reversal, some amount of profit taking, etc. It's difficult to time these things, but you know, I think I would go with what Anuj said, which is the fact that, you know, you're better off buying the dips rather than chasing gap ups and sort of buying into big gap ups. That's not the thing to do here. The biggest positive, of course, and I think this is very important, is oil. There are still, by the way, those who believe that oil prices are going to reverse and then going to start moving higher once again, etc., etc. But, you know, the price is telling you that we are now closer to 90 than we are to 100. You know, oil prices are down $40, almost $40, and that is big news. Dollar is, I think, worth almost, from what I remember, $1 billion plus in terms of our oil imports. So that's big news and a big positive for India. It's big positive for earnings for Nifty companies, etc. It's the most important input, which we don't produce, and bulk of it, 80% of which we import. Sonia.
Okay, well, I mean, you know, that, of course, that's like the fall in Brent crude is also massive, right? Over the last, few weeks, it's gone and it's now sub $93 a barrel.
And the high, I think, was 139, right?
Yeah,
and we are
140.
at 90. I mean, so this is absolutely a boon.
And when
It is. Sorry, you were saying something.
No, I'm saying when it goes up, we talk about it as a headwind. So when it goes down, we need to talk about it as a tailwind as well, right?
No, absolutely. And, you know, Sonia, also, you know, it depends on what kind of market we are in. Because, you know, if it was a bear market, you know, the headlines focus on crude being down because of the demand worries and because of recession fears. But because, you know, the market right now is up, you know, we're focusing on the, you know, the positive side of it. By the way, Prashant, is today the start of the Malayalam New Year, Chingam month, I think. Is it? Someone just alerted me, so I thought I'll just, you know, ask you and, and all our Malayalam New Year.
Prashant doesn't know.
A phone call to Kerala.
I actually needs to ask the family back home. By the way, I don't know if you guys saw the tweet by Elon Musk, right? I mean, he says he's buying Manchester United and he says, you're welcome. I don't know who's welcome. Are the fans welcome or is the team welcome?
Anyone, you know, I'll tell you what, you know, the season started. I really fear that, you know, this is a season in which perhaps United will be struggling to survive, will be facing relegation battle. You know, as someone who has followed this club, you know, since late 1990s, you know, in fact, my first job, Sonia, was as an intern for Manchester United. You know, they were expanding in India at that time. So, you know, they were hiring a lot of college students to sort of do the merchandise sale in college. So between first year and second year. And at that time, you know, they paid me, you know, obscene amount of money to just do that. So, and since that time, I've been in love with this club. It's in shambles, it's in tatters. I think someone like Elon Musk really needs to come and bail us out, yes.
I was almost half expecting that, you know, the next tweet will be, I want to know how many bots there are.
Except
for Cristiano and David De Gea, everyone else can go, I think.
Okay, and the memes are like going out of control, right, already. Let's see what happens with this, but it's definitely the big headline that everyone's talking about. All right, back to our first love, which is equities. We have a lot of commentary coming through for you this morning. First up, Michael Hartnett of Bank of America in their Global Fund Managers Survey says, the sentiment is still bearish, too bearish for immediate reversal of the bear rally. He says they remain patient bears and would fade S&P 500 above 4328 as rates up, profits down base case. He says contrarian bulls are short the US dollar, long banks, while contrarian bears are long utilities, short growth stocks. All right, so they're bullish on banks.
Okay, bullish on banks. We have Mahesh Nandurkar of Jefferies, who says that the coverage pre-X earnings growth of 17% year-on-year was driven by a strong performance from financials, capital goods, consumer, and autos. He says cement, pharma, and IT companies saw year-on-year decline. He adds margin for domestic companies declined further despite 38% revenue growth. Mahesh says that margin outlook is selectively improving on weaker commodity costs, although analysts seem less convinced. Overall, he says FY23 Nifty earnings have already been cut 2.7% early in the year, an issue for market multiples.
So yesterday, the money markets were shut for Parsi New Year. They opened today. And here's what you can expect. Kunal Sodhani of Shinhan Bank says the mixed US economic data has reignited recession fears in the US. He says the dollar index is seen bouncing back sharply from below 105 to 106.5 levels. He adds that Brent crude prices cool off and positive FPI inflows in domestic equity markets give some cushion to the rupee. But all eyes are on the US retail sales and the Fed minutes today. For the dollar INR, he says 79 acts as a support, while 79.55 is a resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says that the market is expected to start the week on a positive note on back of inland July CPI and fall in global yields and Brent crude prices post the weaker than expected Chinese data and surprise rate cut by PBOC. For the rest of the week, market will take cues from RBI and FOMC minutes and demand in weekly auction. For the week, 10-year is expected to trade in a range of 7.2 to 7.3.